Because it's so important to people with inflation hitting so many hard, we continue to report on it. Good news this week, both here and nationally. The new consumer price index that came out this week went down to 2.4%. That's the smallest increase in 3 years. In the Twin Cities, our rate of inflation was even lower at 1.9%. Danny's on the show tonight to try to make those numbers make sense. Hey, Danny.
Hey, Jana. Yeah, the national rate of inflation remains higher, we should say, than the Federal Reserve's target of 2%. And this week's figure of 2.4% actually came in slightly higher than expected. But with overall inflation continuing to ease, we're likely to see the Fed keep cutting interest rates to make borrowing cheaper. In the simplest terms, this week's consumer price index shows the overall cost of goods and services has increased 2.4% over the past year.
This report came in a little bit hotter than expected.
Tyler Schipper teaches economics at the University of St. Thomas.
That just means that it missed expectations by 0.1%, but overall inflation has continued to come down, and that's the important trend that people should be thinking about.
Over the past 2 years, inflation has dropped nationally from a peak of 9.1% in June 2022 to 2.4% now.
Even though prices are still high out there, the sticker shock at the grocery store hasn't gone away, but prices continue to moderate.
Meanwhile, in the Twin Cities metro area, our inflation rate is even lower than the national average, sitting at 1.9%.
The overall picture in Minneapolis tends to be we tend to be a lower inflation city.
Recently, that's been driven in large part by lower housing costs.
Housing is a big part of a typical family's budget, so that has a pretty big weight.
Joe Mann with the Federal Reserve Bank of Minneapolis says the Twin Cities has also done better with gasoline and medical care costs, although on the flip side, prices of food and household energy have gone up here.
So even though gas prices have come down more here than they have nationwide, natural gas prices and electricity prices for your house have gone up more here than they were nationwide.
Overall, though, the slowing rate of inflation here and nationally is an encouraging trend. With the interest rate adjustments from the Federal Reserve, where do you see this going in terms of inflation rate?
I expect inflation rates to continue to drop.
With a stronger jobs report this month, too, the Fed appears likely to continue dropping interest rates, which will make it easier for consumers to borrow.
The unemployment rate fell. We created 250,000 plus new jobs. It did change the view of where the labor market is at. And going forward, there will be conversation about how quickly to lower rates, but I think they're going in that direction.
The Federal Reserve's next policy meeting is scheduled for early November, right after the election,
where we'll see at least one, maybe possibly, hopefully, 2 rate cuts by the end of the year, and then more regular kind of quarterly rate cuts going into 2025.
This is also the last consumer price index report that we'll see before the November election. The next one measuring inflation comes out November 13th. Jan.